welcome back to JK All Day Excelling, where I just throw everything I've ever done in my life into an Excel sheet, because that's just what makes sense for me. Today, I'm going to be going over bank reconciliation processes. Last week was the difference between a bookkeeper and an accountant. So I'll have some fun tidbit facts for you at the end of this video as to where I'm at and what this lovely thing is. And then why the importance of reconciliation is, and then also falling back into last week, the difference between a bookkeeper and accountant, and why it is important to kind of fall in line to those. So let's pull up the spreadsheet and get right into it. So on our spreadsheet, you'll see, gotta let that truck go by. You'll see our bank reconciliation process with GAAP protocol tutorial. Now, GAAP is a code of ethics that all bookkeepers and accountants should be living by. If you have a bookkeeper or an accountant that doesn't understand what GAAP is, you need to train them. I'm not going to say fire them. You need to train them. Train and get more knowledgeable on it. But ultimately, the bookkeeper is responsible for ensuring the GAAP protocols are put into place. The accountant is responsible of overseeing to make sure the processes follow in line with the GAAP protocols and make it all financially sound and integrity plausible, right? We like honest numbers. We love a traceable document, all of those things. Our step one is gathering the source documents, which is all of your receipts. So paperwork, Mike Mazowski, is exactly what goes through my head when I am gathering receipts or asking for data. Verifying opening balances. So on your bank statement, you'll see your beginning balance. It should match the ending balance of the previous statement in your software and on your bank statement. Now, you'll find that QuickBooks has dabbled in entirely too much. Everyone seems to be in love with QuickBooks, but I'm here to tell you that if you get the right software, you do not need QuickBooks. You can have a software that caters to your industry, and you can still get the reconciliation process done if you have a skilled bookkeeper or accountant. The software doesn't matter. The steps to accounting is what the foundation is. So, compare deposits in transit, identify outstanding checks, record bank charges and fees, because those will not be carried over in your software. Those are going to be listed like your bank service charge, $2, or like account status, like you had a limited account availability. You're supposed to keep $1,000 in there. You kept 950, so you got charged $5 because you didn't keep the minimum. So you have a record interest, investigate NSFs, scroll down some. And then we have record electronic transactions, correct any errors, calculate adjusted balances, verify balances match, prepare journal entries, document and file, and then review internal controls. You'll see my little note at the bottom. Cash must be presented at its fair value, which requires accurate reconciliation of all cash accounts. Reconciliation serves as a key internal control under the COSO framework and are essential for compliance and essential for compliance for public companies. So if you are an S corp, okay, you are an S corp, you have a business account, you need to be doing a reconciliation process on your transactions. There needs to be a summary sheet, there needs to be a detailed thing. QuickBooks will do it for you. We'll get into why a software can't do it all. Let's go to our next tab, the transactions. So I had Copilot, ChatGPT do a fictitious company for me and do some sample transactions. So we have a beginning balance of $45,000, $45,250, right? And that's been verified. We've got our deposits, we've got a check coming out, we've got a wire transfer, a utility payment, payroll direct deposit, that's a debit out, right? And you kind of go down the list. We have a customer NSF and a customer deposit. So this is in your bank statement. We're going to highlight this down. This is all listed in the bank. And then we'll go down to what the company books have, which could be a software Or you could be old school in it and getting you a nice little workbook and accounting book, which I haven't done one of those in years, but honestly, with the way these fees are working, I might just, like Bruno Mars says. So, your company transactions, your cash ledger, it's got your beginning balance, which matches the bank balance, and then you've got all your ins and outs. And when you go to reconcile, you've got listed your deposits in transit, your outstanding checks, your bank service charge, your interest income, and your NSF check. So these are what's not listed in the bank statement, but is listed in the company books. And that's going to be your variance. That's where the site comes in, the bookkeeper that knows what to do. Let's go into your reconciliation process. So in here, you'll see you've got your bank balance reconciliation, and you need to follow your bank statement. Okay. It doesn't matter if it's a credit card or a bank account. You have to follow the dates on that bank statement. Does not matter. So you add your deposits in transit, you add your outstanding checks, you have an adjusted bank balance, your company bank balance per books, your interest income, the NSF check that got kicked back out, your adjusted book balance. So we're going to scroll down. You'll see here that your adjusted bank balance and your adjusted book balance is about $500 off. Now that 500 is going to be that NSF check, because what happened is your bank and your system said, we received this money. Your bank kicked that money out because the check wasn't good, but your system still shows that you have this NSF check. And in my last video, I talked about allocations. So in this instance, your allocation, say the NSF check was used to buy lumber. We're just going to use lumber. So your NSF check paid $500 in lumber. Well, your sales side now in your system shows you have $500 in income and product has left. But that check bounced. So you have to mark that. The product still left, so the sale still has to stay, but now you have this NSF check, so you have to deduct it from the income. But the supply can't change because the supply is already gone. So allocation is important, how it's allocated, what it's going to, what is it tagged to, that all falls under bookkeeper and accountant. If allocations throw you off, you need to take software training. So that's where that 500 goes. So the required adjusting journal entries. You'll see here we've got cash because interest income, because it's listed on the bank statement, and it's not a legit form of income for a company. Like it's interest. The bank likes you for allowing them to hold your money for you. So you get some pennies or whatever your percentage rate is based on your bank balance, right? So that's going to be interest income because it falls on a different line on your tax return. And then you have your reported bank charges, right? You have an expense, it's listed as a debit. You have to credit the cash because the way it works on the accounting side, assets equals owner's equity minus liability. Assets equal owner's equity minus liability. Let me say that slower. So when you're messing around with the assets side, the expenses and the cash are on the same. Liabilities and what the owner draws in and puts in and dumps out is the owner's equity. Liabilities is like credit cards, insurances, things like that. And then you have a reconciliation approval. So prepared by would be your bookkeeper, reviewed by would be your accountant, and approved by would be accountant/business owner. And that is the sum of the reconciliation process. Now, that's the basis of a reconciliation is to say, this is what came into your bank account. This is your beginning balance. This is what came in. This is what went out. This is what you end with. This matches your books. Now, the part that gets tricky with people is the audit part. The audit is something separate. The reconciliation takes care of those transactions done within that month. After before that and after that, you should be running an audit trail, which we will get into the importance of audit trail next week. Audits are fun because you can track anything. I can be tracked with an IP address. Like, you can't hide anymore. Everything is digital. Doesn't matter if you're what you're doing. You can't hide anything. So, fun facts about where I'm at and what I'm doing. I'm currently in Tennessee. I believe this is called Shelby Park. But there's this cool bird that's sitting behind me, and there's a pretty lake. Um, we're just vibing, okay? Accounting is necessary in all industries. It doesn't matter, again, what software you use. It doesn't matter. It does matter what software you use. You need to make sure you get a software that actually can support the business that you're doing. But all companies will need an accountant. All companies are going to be sold easy stuff on the reconciliation process. I have found in QuickBooks will have AI do the rec for you. And even some of the softwares that I've been in, where the business owner can do a reconciliation in there, they have an auto reconciliation, which it doesn't, it's good. The reconciliation in and of itself can be automated as long as there is a human taking care of the first part of it, the recording of the transactions, the coding of the transactions, gathering the receipts. You still need a human to review human activity. A computer is designed to answer to algorithms and trends. It takes somebody that knows your industry, knows your spending, and can catch all the caveats in it to dissect it and make that P&L actually represent what your company is doing. The goal is to have a profit and loss report that represents your real life experience in running the company, right? And designing a life that actually makes your soul set on fire. Do things that you love. I was told long ago that, oh, you're meant to retire and da 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 da. But the people that I've come across that have lived the longest, they don't stop working. They stay in stewardship to those around them. That's what helps you live long. The moment you stop working is the moment you start dying. So you need to make sure that you are passionate about your work, which is why I love working with small business owners. They have a product, they have an idea, they want to share it with the world. They want to make the world a better place. And it's only in small business owners that I've found that.
So, if you stuck around this long, thank you for watching. Definitely like, share, comment, subscribe. Go to my website, jknaccountingpayroll.com, if you would like bookkeeping, accounting help. Maybe your software is throwing you for a loop. I got my Chinese com balls here, so they're Tai Chi handballs. But definitely hit me up on my website. Text me, email me. The Excel sheet attached to this video is available for free download in the Dropbox. So go to the YouTube bio. The Dropbox link is there. I'm trying to get better about adding them into the little about me's, but we're human. So definitely go check it out. Message me if you have anything else for me, and I hope you guys have a great day. Toodaloo. Come back next week for audit trails, how you can be traced no matter what you do.